Hey, this is Mike Barnes, the financial first responder. Hey, listen, have you ever thought about, or maybe you asked yourself this question, do you have a cash flow mindset? Are you wise with your money moves? That's what we're going to talk about for the next few minutes. Let's go. So, when we look at the definition of cash flow refers to the movement of money into and out of a business or investment over a specific period of time. It is a crucial metric for investors and business owners as it reflects the liquidity and the financial health of an entity or a family. You see here, we have two sets of people. We have the investors and we have business owners. And you probably fall in one of these two categories. So let's get started. Investors, by definition, an investor is an individual or entity that allocates capital with an expectation of generating a financial return. The investor may engage in various asset classes such as stocks, bonds, real estate, commodities, and their primary goal is to grow their wealth over time, making strategic investment decisions. Investors often analyze the market trends, access risk factors, diversify their portfolios to take and achieve a balance between potential returns and risk mitigation. The investment horizon can vary from a short-term trader to a long-term investor, both of them seeking sustained growth. A business owner, they're a little different than an investor because the business owner is an individual or entity that establishes and operates a business intending to generate a profit. Nobody goes into business not to make money, people. Business owners take on the responsibility of managing the day-to-day operations, making strategic decisions, assuming the risks associated with entrepreneurship. They may operate a small business, a startup, a large corporation across various industries. Business owners are involved in crafting business strategies, overseeing financial performance, and ensuring the overall success of enterprise. Success for a business owner often involves effective leadership, innovation, adaptability to a changing market condition. So, what are we saying here? We're basically saying that as a dividend income, there are some benefits to an investor. The first thing is they want regular cash flow or inflow through dividends. Now, what is the risk? There's a dependency on the company's dividend policy. Then we go to the investor and we look at interest payments. Now, if I'm an investor, the benefit for me would be fixed income from an interest-bearing investment. But what is my risk? You say, Mike, it's the default associated with the issuer. I would also want some capital gains. The benefit would be the profit from selling investments for a higher price. But what would be my risk, Mike, you say? My risk would be that the market would be very volatile. It would go up and down, and it would affect the asset price. Now, as a real estate investor, I can tell you a benefit here, consistent income from real estate investments. But what is one of the risks? When I first started out doing real estate, property value fluctuations and vacancies, royalties. This is a passive income from intellectual property. The changes in the market demand for the product, is your risk. So if there's no demand, there's no product. Let's look at the last two for an investor. Loan repayments. One of the benefits is it's a regular returns for loans made to a business. What is the risk? You could default on the risk of the borrowing entity. In other words, you can't pay the money back or pay the person back that you borrowed from. Equity investments. The benefit, profit from selling shares at a higher price. What's the risk? Market fluctuation impacting the stock value. Now, that was your investor. Let's look at the business owner. Here are 7 things that I would think that a business owner such as yourself, would want to know. The first thing you want to know as far as cash flow is your operating cash flow. Now, the benefit is you have the day-to-day operational expenses that are covered. The risk is that market conditions could affect your sales, i.e., stop the cash flow. Accounts receivable. One of the benefits would be receive or revenue from credit sales. One of the risks would be delays or defaults in payment. This means that your clients or your customers wouldn't pay you on time. Inventory management. The benefit, efficient inventory turnover improves cash flow, meaning as you get your products out of the door, you make cash flow. But one of the risks would be is that your product becomes obsolete or it's overstocked. Expense control. One of the benefits, lower costs results in positive cash flow. The risk, inadequate cost cutting, would affect your operations. So these are some things that you need to think about as a business owner. Let's look at the last three. Capital expenditures. Your benefit would be strategic investments for the future growth of your company. The risk would be over leveraging and high debt. This happens a lot to companies that don't look at their bottom line on a regular basis. Debt management. One of the benefits, controlled debt leads to better cash flow. What is the risk? High interest rates and refinancing challenges could be an issue for you if you're a business owner. Cash reserves. Everybody loves cash. They say, Mike, cash is king. Yes, it is. One of the benefits, you buffer against unforeseen expenses or economic downturns. One of the risks, if you have opportunity costs of not investing your surplus cash, then that cash is doing you no good. That cash is trash. All right, let's go. So let's look at some real life instances because everybody says, well, Mike, I need some real life instances. You gave me factual stuff. Give me some examples. So let's talk about this dividend income. Example, investing in a stable utility company that consistently pays quarterly dividends, providing a reliable income stream. Now, this could be your light company, your gas company. It could be, I should say, electric company, solar company that you might invest in. What would be the risk? The company faces financial difficulties and reduces or eliminates the dividend payments altogether. Interest payments. An example would be holding a government bond that pays regular interest, ensuring a predictable income. Now, as we get older, most people will ladder their bonds and they will take out distributions, right? Now, what would be the risk? The bond issuer defaults on the interest payments, leading to the financial losses. Now, this traditionally happens with bonds that are not backed by the government. Maybe they're by an individual company. So you would have to look at the bond ratings. Capital gains. Example, purchasing shares of a tech company at a low price and selling them at a higher price after significant market growth. Now, everybody knows that there's a bunch of companies out here right now that are killing it in AI. And I'm not going to name those companies. But if you bought when it was super low and now these companies are super high, that you probably made a great return as far as capital gains. Hopefully long-term capital gains, not short-term capital gains. Risk market. The risk would be a market downturn causing the decline in the stock prices and capital is lost because the stock went down. And if you sell when it's down, obviously you lose. Let's look at some real life examples as far as cash flow with investors. The other four things we need to look at. Rental income. Example, you own the residential property or apartments, earning monthly rental income from tenants. The risk, the economic downturn leading to increased vacancies and rental income reduction. Now, true note, during the pandemic, I had a lot of friends that own real estate, and some of them went through this because people couldn't pay, but they were still living there. I was fortunate because I was a part of the affordable home program, i.e. formerly Section 8, and that meant that I didn't lose any money during the pandemic. I was highly blessed because I provided housing for people who were less fortunate. Um, some people laughed at me because I provided those services. However, when the pandemic hit, those people that laughed at me um, tend to come back to me and ask me how they could get in on doing that actual service. So in a short example I would give you is that um, real estate being good, you can always have an issue where something happens. You can either not make enough money, or you can not make any money, or you can make just enough to pay your mortgage. Now, royalties. Example, receiving royalties from a best selling book or a popular song. Now, artists, musicians, and writers, there's a whole bunch of people out there that gets royalties. But one of the risks that they inherently have is that changing consumer preferences reduce demand on their intellectual property. I mean, songs that are out hot now, they're not going to stay hot for long, right? They might be a couple of years, but after that, that's it. Loan repayment, lending money to a small business and earning regular interest payments. What is the risk? Borrowing the borrowing business faces a financial difficulty or defaults on the loan completely. Equity investments, investing in a growing startup and selling shares when the company goes public, realizing substantial gains. Now, I can tell you from experience, I have several IPOs that I've been involved in, and it's been great. But there are some that didn't do so good, right? So the risk would be that the market volatility lending to a decline in the value of the invested stock. So you might put more in the stock than what it's worth. So those are the things you need to think about as an investor. Let's talk about real life as a business owner. Now, when we talk about operating cash flow, the example, a retail business generating sufficient daily sales to cover operational expenses and maintain positive cash flow. What is the risk, you say, Mike? If the company's doing good, a sudden drop in customer demand affecting daily sales. You could have a business that's up today and then tomorrow is down because customers don't like anything in your store. Accounts receivable. A good example of this would be a manufacturing company selling products on a credit terms, receiving payments from customers within a specified period. The risk would be the customers delay their payments, default on their credit obligations. It could happen. Inventory management. A great example of this would be a clothing store managing inventory efficiently, regularly updating stock to match customer preferences. What is the risk, you say, Mike? You'll notice I'm wearing one of my brands now. Holding excessive inventory that becomes obsolete and goes out of fashion. Expense cuts. As a business owner, we have to think about expense cuts. A technology company implementing cost-cutting measures without compromising product quality and leading to improved profitability. What's the risk, Mike? You say? Inadequate cost control resulting in financial inefficiencies. So, what are three other ones, Mike? We talk about capital expenditures. The example is a manufacturing firm investing in new machinery to increase production efficiency and meeting growing demand. That's a good thing. But the risk would be over leveraging by taking out excessive debt to fund the capital expenditures. You don't want to over take out debt. I know business debt is good debt, but you still have to monitor your debt. Debt management. A construction company refinances high interest loans to lower interest rates and improve cash flow. What's the risk, Mike, you say? Difficulty in refinancing due to economic conditions or credit rating changes. Cash reserves. Here's a great example for you business owners. A small business maintains a cash reserve to cover unexpected expenses or seize new business opportunities. What is the risk, you say, Mike? Keeping excessive cash reserves and missing out on a potential investment return. You can't do both. You can't have the cash sitting ready to purchase something big and then you actually lose out because you have not taken advantage of your potential for the investment. So, with that said, if you have any questions, you can reach out to me at Mike, the financial first responder.com. And I have a special offer for you today. Guess what it is? Click the link below, find your free gift. For those of you who are interested in starting a business from scratch, here's a great opportunity for you. Click the link below, like and subscribe this page, and I look forward to talking to you. Have a great day. God bless. Mike Barnes, the Financial First Responder.